why I say end of the day, it is not which indicator or strategies, but it is your consistency in application, all right? Applying the lot sizes, which are the money management and the risk management. The risk-reward ratio is not sound. Your risk-reward ratio, you, like what Nikhil said, you have a lot of profits, but your profits are like, that means your win rate could be high, right? Just now I asked about Ruchika about the win rate, right? The probability. So out of 10 trades, perhaps you could have 80%. So a lot of greens, 80% winning. But each win is only a few dollars. But once you hit a loss, even though it's 20% loss, if you hit a 3-digit, it could cover up all your accumulated profits. And, so that is your risk reward. Risk reward meaning what? The ratio, your risk, your losses versus your profits. So in trading, we don't look at just the probability, right? And do we need a lot of trades also? It depends, right? And also doesn't mean that, the more trades you have, the more you are risking it as well. So then you would have to take note of your TPSL. That's why I think one of you guys actually asked her about the TPSL tips that you set and your consistency. That is why it's like, I think you're getting a little bit of the gambling mode. Right? I think if both of you doesn't want to say that, but to me, my observation is it's a gambling mode. So when we go into when you go into some gambling, which probably you guys have not gone into any casino to gamble, so that, gamblers, when they bet and they lost, they want to double up to quickly gain back whatever they lost, right? But make sure that they double up, their confidence level of that double up makes back the loss, the first loss. Or if not, the third time they're going to put in triple, because thinking that they're going to make back the first 2 losses. So you just pile up your losses, right? So that is why your consistency, meaning that your lot sizing, that is your risk management. Because if you're winning only on the low lot size and you're losing on the high lot size, that could also be your failure. You get what I mean? So then it depends on what strategy, your time frame, your time period that you apply the different markets. So I would suggest that to be more disciplined, you might need to put out in a journal. Because if not, it's a bit difficult for us to review where you go wrong, or even for yourself to reflect, right? Which market you fare better? Because I can't really tell which market you fare better. It's like Nikhil knows that his strength is in index, right? Maybe, I believe Sigma probably know, or certain strategies he used, and the confidence level to determine the lot size. But you, how about yourself? All right, but we won't be able to track unless you yourself track it, right? Also for the rest, especially the 2 ladies, all right? I hope you guys learned from each other. It's more like each of you have different style, right? But end of the day, that's why the question I asked you guys, whether the highest profit should be the champion or the consistency is the champion. Consistency of making profits, not the quantum of the profits. Right? So which one are you pursuing? Because if you're pursuing high profits, I'm not too sure whether can you still top the champion, be the champion on the following month. If you only pursue the highest profit. You don't need to believe me, just go ahead and continue to pursue the highest profit. Let's see what happens. Right? But consistency, right? So what I also observe, all right, is the consistency. Now, this month, August, what I gave you guys, different markets, like I mentioned in the beginning, different markets have different challenge, different familiarity. Your different, familiarity of you applying the same strategy on different markets. So you should also reflect, can one same strategy apply on different markets? Right? Like I mentioned, it may not. Some markets are correlated, some markets are not. Okay? Even in FX pair, certain pairs could be quite correlated. Right? But in indexes are a compilation of a different, right, probably different stocks. And that's why it's bigger contract size, and that is why the movement, it could be faster. You trade one stock versus you trade a basket of stock, say in indexes, again, the movement is different. So can one strategy apply for all markets? Right, this is where you guys need to take note. Then the time frame and the time period you trade. Different markets open at different hours. Which market hours favor you to have better probability, better prediction, better forecast, and then give you better probably confidence level whether to decide if you should put bigger lot sizes. You would have to take note and do your homework. That's why putting in a journal for you to reflect back. Because by the time we come towards the end of the month, hopefully you would have also, note down a reflection. Every loss or every gain, you don't need to, reflect too much, too emotional on it. But over the week, you should review, right? Especially if it's a different markets. Then this is where, like I mentioned, you would decide whether to change, right? Not the market change. Whether you want to change your strategies, you change your risk management approach, or change your money management approach, or change your psychology for the following new week. That's why in trading, every day is a fresh day. Every day start afresh. Right? You can get better and better in your own capacity to analyze the market, to combat the market. Not the market change for you to suit you, but you, right, become sharper, clearer, and even more agile to react to different markets. Of course, you will eventually find which is the markets that you can manage to analyze and grasp to your benefit, to your advantage. Eventually, you guys need to know. Then you can then focus on, all right, that is the market which I have the most gain. The time period, the time frame, the type of strategy used. But then again, also take note, sometimes the same strategy on the same market could be very profitable for this month. Not necessarily it would be for the second month. It could also happen, right? It could also happen. This is where sometimes traders can get off guard, right? Whether is there luck element, I think I told Pooja there is luck element. Still a certain percentage, but not always, because luck also not always in favor of you. So then it's your consistency. Because if your consistency plus your luck, this is where you will have the highest quantum of profits. But if you are not able to consistently manage your risk and your, the money management part, not only that your luck will not come in to help save you, probably the luck will only help save you to have less losses rather than margin call bust account. That is probably luck buffer you from a huge downfall if it's a live account. Okay, imagine if you have $1,000 within 1 month or within 1 week. Like Ashi, if this is assuming this is a live account, right? Every trade, let's not take it like it's a demo account. Let's risk it, doesn't matter. No. Try to take it from the perspective like if this is a live account, I would have already lost 90% of my capital. Right? Yeah. So even like Sigma, you have made 80% of the profits. We have continued to be humble for the next month, for the next day, for the next week. Okay, because this is where, right, the ego can come in, whether becoming greed or being too proud that, oh, I'm the champion, right? So, but the next, like I mentioned, the champion can move. The next week or the next month, you may be fallen because of being too overconfident as well, where your ego took over. So trading, end of the day, like I mentioned, whatever techniques, whatever indicators, these are just probably 50% or even less. That is why I can give you the best guru, but the best guru is yourself. How do you then tell yourself? That's why I say it's a mirror, it's a reflection, right? You teach yourself whether to be creative, to be agile, to be adaptive, to be changing, right? To better be prudent on risk management, to be fast enough. That you are your own gurus. And of course, each of you can be guru of each of you other. That is why a social review will be good. Because by sharing, you look at it, you can review other people's trade. That by right should help you to make your decision on your own trades. Right? When you say it out, it could probably be more, into you. So these are all very valuable lessons, right? So, okay, so this is my conclusion for you. Are you guys, still up for the third competition?